Good evening, everyone, and welcome. A day of high drama in Greece, in Puerto Rico, and in stock markets around the globe. On Wall Street, U.S. stocks had their worst day of the year. The Dow plunged 350 points, nearly 2%, as positions hardened in that long simmering Greek debt crisis. Greece says the payment due to the IMF tomorrow won't be paid. And late today, Prime Minister Alexis Tsipras turned up the rhetoric against Greece's creditors, urging Greeks to reject the terms of an international aid deal in a referendum he has called for this Sunday. He said the stronger the rejection of the creditor deal, the stronger the Greek hand in any future talks. His comments followed another credit downgrade from Standard & Poor's, which said that a commercial default in Greece was inevitable within 6 months, and that the probability of Greece exiting the Eurozone now stands at 50%. That's well above any prior prevailing views. By the close, the Dow Jones Industrial Average fell 350 points. The close at 17,596. The Nasdaq was off 122, and the S&P 500 fell a sizable 43 points. European financial markets were jolted. The so-called pigs stumbled. Portugal and Italy's stock markets fell 5%. Spain's off 4.5%. With the Greece stock market closed until at least July 6th, the Greek ETF fell 20% today. Michelle Caruso-Cabrera has our story from Athens.
As night falls in Athens, it is the end of a pivotal 3 days for Greece. It started late Friday night when Alexis Tsipras, the prime minister, announced after midnight on national television that he would hold a referendum this coming Sunday for the Greeks to vote on whether or not they wanted to accept a new bailout package from Greece's international lenders. He described the package as too harsh, as blackmail. He said the Greek people should vote against it, and that would give him a better hand in negotiations. Within hours of that announcement late Friday night, that's when Greeks started lining up at ATMs across the country, a bank run in the middle of the night that extended throughout the weekend and eventually led to the ECB saying they had had enough. They could no longer extend more liquidity to the Greek banks. As a result, they didn't open this morning. As we face this referendum less than a week from now, it's growing increasingly possible that Greece could leave the euro, hence why so many people were taking money out of the ATMs over the weekend. In fact, Standard & Poor's came out today and said they think that now there's a 50% chance of Greece leaving the euro. Alexis Tsipras, once again on television tonight, telling the Greek people he doesn't think Greece has to leave the euro, even if the Greek people vote against the bailout program. He does not think the Eurozone will kick Greece out.
They will not kick us off the euro, kick us out rather, the Eurozone. Let me explain why. Because the cost is immense. The economic cost, the financial burden.
As the Prime Minister was speaking on television, in the square you see behind me in front of Parliament, thousands of Greeks were out to support him in what they call a Vote No rally, chanting "Ohi, Ohi," that's Greek for no. But tomorrow night, same time, same place, a yes vote rally. And you can be sure everyone will be watching the size of the crowds to get some kind of inkling as to how Sunday's vote might turn out. For Nightly Business Report, Michelle Caruso-Cabrera, Athens, Greece.